Okay, what is up, traders? What's up, tycoons? Just wanted to give you guys a quick update on UNG and Boyle. And of course, to track UNG and Boyle, we need to track the price of natural gas itself. So we're definitely going to be doing that. But let's jump straight into it. Smash the like button, subscribe to the channel if you're new. Boyle recently has closed over its 8-day exponential moving average, the EMA. That's what this line is right here. As you can see, Boyle did close above it. All right, UNG also closed above its 8-day EMA. These are good signs. These are good signals, but there's still some work to be done, okay? There's definitely some resistance overhead, and we need to see us continue to close over the EMA if we want the possibility of a bullish rally and potentially reversal. Now, when it comes to the moving averages, right? UNG closed above its 10-day moving average. This is our 20-day approaching. We want to see us get above that 20-day moving average. Same thing with Boyle, okay? We're closing above. As you can see, we broke, fell back below, and now we're holding the 10 moving average as support. So some good signs there we're seeing in Boyle and UNG, definitely. But as I mentioned, we need to track the price of natural gas, and we're also going to go over the different signals that we use to help understand price action along the MACD and also the RSI. So if you take a look, there's lots of arrows on the chart. These are all the times that we've had multiple divergences and signals. So here we're clearly creating higher highs. If you look at the relative strength index, we're losing relative strength. We're making a high and then a lower high. That's bearish divergence. You also combine that with your MACD, and we got a sell signal when the red line crosses below. So most of the times that we've had a double signal along the MACD and the RSI with a divergence and a MACD entry or exit signal, it's been correlated with the respectful move. So over here, we're making lower lows. Meanwhile, the RSI is making higher lows, followed by a MACD entry signal, and we get a nice move to the upside. Over here, higher highs, relative strength index making lower highs, bearish divergence, followed by a MACD exit signal over here, and we get a large move to the downside. Over here, we're making higher lows, building relative strength as the price is going lower. Then we end up popping, right? Over here, bearish divergence making higher highs along with lower highs on the RSI. Combine that with a MACD exit signal, and we get a large move to the downside. Now, that brings us to where we're at right now. This right here is still relevant. This initial bearish divergence that caused this drop is relevant because we haven't retested this trend line. Okay, we have a higher high here, lower high here. The RSI is starting to creep up. And if we, come to this level, we really want to see us break out, retest, and push up higher if you're going to be bullish on UNG or Boyle. So pay close attention to that one. The MACD is trying to curl up right now, but it's a little bit weak, right? It's zigzagging. We need to see this red line really curl up and show some nice momentum, as anytime that it zigzags, it tends to continue in that direction. Okay, so if you take a look here, we're zigzagging down, and we're also zigzagging on our MACD over here. Same thing right here. We're zigzagging, 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 and it continues that trend of heading upwards. So whenever the MACD is choppy like this, it's going to continue in the direction that it's in right now. Okay. But over here, we have some other charts that I've made up. This is UNG divided by SPX, basically the stock market. And these are the declines before the bounce over the past like 10 years. So here we get a 45% decline and then a nice bounce. Over here, we get an 80% decline and then we get a nice bounce. And then we get a 57% decline and a nice bounce, 85% decline, nice bounce. We've declined about 75%, guys, from its most recent highs to the lows. And the whole reason I have this is just to say that, this thing has definitely been overextended, right? There's been a couple times where we've fallen 80% and 85% on this ratio before bouncing. So we may end up seeing that, right? It could possibly, drop back down to 85% before bouncing. But the purpose of this is to show how really overextended this sell-off has been, and how we, could potentially be approaching a bottom if we haven't already put one in. Over here, we have UNG divided by XLE. We have a new low timeline right here. So take a look. It takes usually about 11 months, 10 to 11 months, right? Now, there were some time periods to put in a new low that were much shorter. But if you take a look, we put in a new low here after 11 months, a new low here after 11 months, new low here after 10 months. Okay, and then we go this long extended period without really putting in a new low. And then we have a 7-month period over here. We put a new low. A 5-month period, we put a new low over here. 9 months, we put in a new low. And then we're making higher lows. And it's been 12 months, guys. It's been a year. really since we've just been putting in newer lows. So, based off this timeline, we should be starting to see some type of a rally here soon, but it doesn't mean it has to come right away. There's definitely been periods where the bounce takes a while, right? So we put in a new low after this 10-month period, and then it takes a while before we actually get a big move. Same thing over here. We get a little bounce and then it comes back down. Over here, it's real choppy after that 11-month period, and then we start to get the bounce. This is natural gas divided by XLE, and this thing is approaching all-time lows. Okay, this is natural gas divided by XLE, and look at how steep this decline has been. It's been just like straight down, really, really wild. Now, these are the UNG December 2020 lows. These are some of our support levels we have on our UNG chart. When we take a look, we tested 822 in December of 2020. And then over here, we had some lows of 904 in about April of 2021. And we blew past those prices, guys. We definitely fell below them, but it's good to see us back above this 822 level. That was a big support level we wanted to hold. Now, these are the MACD and RSI and FIBS signals on UNG itself. So here you can see we're getting some of our similar signals that we took a look at in the beginning. We have a low here. We have obviously lower low, definitely been in a decline, but when you look at your relative strength index, we have a slight bullish divergence. Okay, we have a low and then we have an equal low here. So even though the price of UNG has gone down so dramatically, we're actually still holding relative strength right here and maintaining relative strength rather than losing it. So that would be a slight bullish divergence. We've done a really good job of holding that 822 support level. I just showed you guys where we got that from. That's our December 2020 lows. And we're chopping, we're consolidating. Okay, we have overhead resistance at 904, and then as well as 1031 and 1167. These were some prior support levels from some of our previous lows in the history. And you can see we did respect these levels, but ultimately we ended up breaking them and flipping them to resistance. So we definitely want to get above those. Now, the reason we have these fib levels on here is because you use these ultimately to, track trend continuation or trend reversals. Nothing moves in a straight line down or in a straight line up. You get a move down, retracement, continuation lower, or a move up, retracement, continuation higher. Now, you can use these to spot reversals if you break through your retracement levels. So notice how over here we retraced up to our 61.8% level and then continued that trend back downwards. Okay, if we would have consolidated here and broke through, we could have had the potential chance for a reversal. So even if we do get a really strong move in UNG, you need to be very cautious up here at 1323, 1485, and 1647, as that would just put in a healthy retracement, ultimately to potentially go back down lower. Okay, so I definitely would be cautious going long at these levels, and rather you want to look for a breakout retest, continuation up higher. Once you've reached some of these levels. Now, it doesn't mean we have to go up here. Okay, of course, we have the resistance levels that I just gave you guys, but when speaking in terms of retracements and the Fibonacci's, these are definitely would make sense if we did get some type of a bounce up to there. Now, this is the Boyle MACD, RSI signals, and FIBS as well. As you can see, we're making all-time lows on Boyle. We cracked through our 795 support. Remember, we are above our EMA and moving average. So, we do have slight momentum on our side trying to build, but we want to see us get above that 795 resistance, okay, and start to head back up towards 1461. Same thing with UNG. These are our Fibonacci targets up here at 1980. 2420 and 2860. Those are the three most common and most well-respected retracement levels. As you can see over here, this is when we actually did get a fib reversal. Okay, so we had a high here, we put in a higher high because we broke through our major retracement levels. And then shortly afterwards, what do? We come down, retrace up to the 50%, and then continue that trend downwards. So, that's basically how you would use the fibs. Now, this is our ABC structure on UNG. If you're not familiar, basically your wave C, okay, is going to be the 1.0 extension of your wave A and B. So we have this move down right here, okay? The 1.0 extension of that brings us to 752. So we've done a good job, remember, as I mentioned, of holding those December 2020 lows at 822. But if for some reason we crack them, I'm going to be looking at 752 for the next major support level, as this has been a pretty strong move to the downside. And it kind of seems like an ABC structure to me. If you take a look here, right, what we have is a 1, okay, 2, hold on, I'm using the wrong pen for this. So we have a 1 down, 2 up, 3 down, 4 up, 5. Okay, so this is a 5-wave impulsive move. Your wave 1 and your wave 3, or your wave A and C, should be 5-wave impulsive moves. And then your wave B is going to be a corrective wave, which is just going to be a 3-wave correction, right? So A, B, C up like this, and that's what we got. And we've put in a 1, 2, 3 here, and wave 3 is always going to be the largest wave. Okay. But it's just real interesting to see, we did have the 5-wave followed by a 3-wave afterwards. So, this could potentially mean that we're going to get our wave 4 bounce up to some of our retracement levels. But we have to break through our major resistance levels. Okay. Before we can hit those. And if we do that, that's when we could end up coming down and hitting the 752 target. Or, there's another way to look at this, right? We could have a 1, 2, 3, and then we got a little bounce here and then this could be our wave 5 putting in here and ending. So it's a little bit interesting, a little bit tough to tell. But, if this is going to be an ABC structure, a 3-wave structure, 752 ultimately would be the 1.0 extension of that move, bringing us down to 752. So that's going to be it for today's video. Just wanted to give you guys a quick update. Things are looking okay. We're stepping in the right direction, but we really need that to continue.